Hi everyone, in this video we are going to discuss how to legally remove a cosigner from a loan, okay? And this is not going to be instructions telling you to refinance, which is what I see the majority of solutions on YouTube is the same thing, refinance or get a personal loan, trade the car in, those are all, yes, they are solutions. But what do you do if you co-sign for someone and that person stops paying and your credit is getting damaged? What do you do in that situation? Because you won't get approved for a loan more than likely if you have recent late payments. So all of those will not be a solution for you. However, this is a solution. I've represented clients and got them removed from the loan and the entire loan removed from their credit report, along with the derogatory reporting as well. Basically, they got their life back. Okay, so I just want to put out there, this is not intended to be legal advice. Okay, this is just me as a person explaining what I have done in my own life. So do not take any of this and use it as legal advice. Okay. All right. So what I've done is I'm just going to give an example. I had a client who approached and contacted me actually and said, "Hey, I co-signed for somebody and it was a vehicle and they stopped paying. It was destroying my credit. The car got in an accident and the insurance company sent a check for around 10 grand. And that person who she co-signed for just kept the money, left the car, you know, inoperable and everything else. And it was just completely ruining her credit. So let me just sum this up for you. Okay. If you are what the FTC considers a cosigner, meaning you're strictly just allowing them to use your credit, you don't get any compensation at all for the use of the vehicle. In this case, uh, the client co-signed for the car. She didn't live with the person. She never saw the car. She never used the car. She never received any money, or services, or goods for co-signing for the person. Okay. Another thing you'd want to do is investigate if, the first thing you want to do too is try to get the documents from the dealer to see if they ran the person they're co-signing for, if they ran their credit first. Because basically, if they run someone's credit first and then they run a person's credit second to determine they need a co-signer, even if on the loan they put that the person is a co-owner, they can still be considered a co-signer in the eyes of the law, even though it can say it's a joint loan on and an owner on the contract. I should call it a retail installment sale contract. Okay. In the eyes of the FTC, though, that person would be a co-signer, regardless. Doesn't matter what it says on paper. So as long as they have no compensation for the co-signing for that person. Okay. Also, this does not apply to real estate purchases. Okay, so it doesn't apply to loans like mortgages, any loan to purchase property doesn't apply to that. Okay, but basically, to sum it up in a nutshell, there is what's called an FTC cosigner notice, and it's basically looks like this: notice to cosigner. The credit practices rule, and it's section 16 CFR 444, right? So you could just think of it as the 444 rule, right? 444, okay? 16, here we are in the Code of Federal Regulations. It's the credit practices rule, okay? Definitions, that's always important. You want to look at the definitions whenever you're looking at a law because you need to know what the words actually entail. So a lender is a person who engages in the business of lending money to consumers within the jurisdiction of the Federal Trade Commission. Retail installment seller. For those of you that don't know what this is, if you go to a car dealership and you get a loan and you get what you think is a loan for the car, that's actually not a loan. It's a retail installment sale contract. Okay, a loan is I give you $10,000, you pay me back $10,000 with interest. When you get a car, it's a little bit different. Okay, it's like, hey, I get, I'm go to the dealership, instead of you giving me money, it goes for a car, and you can repossess the car and everything else. So it's a little bit different. Okay, and then there's also there's other things that entail with that. So just know when you see retail installment seller, that's kind of referring to what you would think of as a loan from a car dealership. Okay. Person. Now this is interesting. It says an individual, and it also says corporation or other business organization. So the definition of person here is an individual or a corporation or other business organization. Okay. Consumer, a natural person who seeks to acquire goods, services, or money for personal, family, or household use. Obligation, agreement between a consumer and a lender. Okay. So on and so forth. So cosigner, let's get down to the definition of that. A natural person who renders himself or herself liable for the obligation of another person without compensation. The term shall include any person whose signature is requested as a condition to granting credit to another person or as a condition for forbearance on collection of another person's obligation that is in default. Okay, the term shall not include a spouse whose signature is required on a credit obligation to perfect a security interest pursuant to state law. That's going to entail mostly towards getting a vehicle. There's a security interest put on the vehicle. Okay, a person who does not receive, this is important, a person who does not receive goods, services, or money in return for a credit obligation does not receive compensation within the meaning of this definition. A person is a cosigner within the meaning of this definition, whether or not he or she is designated as such on a credit obligation. So what does that mean? That means that even if it says that they are a co-owner, if they don't receive goods, services, or money in return, and they put their signature on it so that the loan would get approved, they are a cosigner. Okay. Now, basically, if they're supposed to have this notice, okay, that is signed by the cosigner, and it says you're you are being asked to guarantee this debt. Think carefully before you do. If the borrower doesn't pay the debt, you will have to. Be sure you can afford to pay if you have to, and that you want to accept this responsibility. You may have to pay the full amount of the debt if the borrower does not pay. You may also have to pay late fees, collection costs, which increase the amount. The creditor can collect this debt from you without first trying to collect from the borrower. The creditor can use some collection methods against you that can be used against a borrower, such as suing you, garnishing your wages. If this debt is ever in default, that fact may become a part of your credit record. This notice is not the contract that makes you liable for debt. So what happens is a lot of times, if you're at a car dealership or someone's trying to get you a loan, other than that, they will not have the consumer sign this because it can scare away a lot of people. So they figure, we'll just let it go because not that many people even know about this, right? So what you can do, and this is what I did, once the client came, it was a situation with Volvo, and I got in touch with Volvo's, basically you can just reach out to them and say, hey, can you please send me a copy of the FTC cosigner notice that I was supposed to have signed at the dealership? Okay, because what happens is at the dealership, they sell the loan to these big finance companies. But once the finance companies purchase the loans, they then step into the shoes as the dealership and they're fully responsible for everything. A lot of times they won't have it. Okay, so if they don't have it, then you can, most of the time, there's going to be an arbitration agreement. Okay, a lot of the times in the original contract that you signed. So you'll want to get a hold of the original contract that you signed and you'll want to review it and make sure first, see if there's an arbitration agreement or not. If there is an arbitration agreement, what we did is we file arbitration. under the State Unfair Deceptive Trade Practices Act, saying, hey, you didn't have them sign this FTC cosigner notice, therefore the contract is invalid and you need to remove them as a cosigner and remove it from their credit report as well. And that's what they did. Okay. So basically, if they don't sign this cosigner notice as a separate sheet of paper, separate from the contract that they have to sign, if they don't sign this piece of paper, you can, in many cases, get them removed from the debt and have it removed from their credit. Okay. So let me explain a little bit more into this. Okay. So unfair credit practices. Okay, so here's again that notice to cosigner. The FTC says this is what you must include. And there's several things that are in the credit practices rule. Okay, this was a rule that was made by the FTC under the FTC Act. So basically, it says they must give you this piece of paper. Now, there is no private right of action, okay, for the federal law. Okay, so what that means is basically every state has what's considered a deceptive and unfair trade practices. Okay, there's about 40 states that have the definition as this unfair and deceptive, and then the remaining ones, even if they have the definition of what's an unfair, or if they have it as just deceptive, you can argue that the contract itself is deceptive because of the fact that you didn't get the cosigner notice. So what you can do under the state's Unfair Deceptive Act and Practices, you'll see most of them will use the federal courts for guidance. So you can see here, Florida, I just did a search, Florida's Deceptive and Unfair Trade Practices in Google. So you can just put your state and put after that, you know, like California's version of unfair and deceptive trade practices law, or Virginia's version of unfair deceptive trade practices law. Okay, you can put any of those in there and it will pull up that state's law that is unfair deceptive acts and practices. Okay, so for this example in Florida, you can see here it is the intent of the legislation that in constructing subsection 1, due consideration and great weight shall be given to the interpretations of the Federal Trade Commission and the federal courts relating to section 5A1 of the Federal Trade Commission Act. That's the FTC Act as of July 1st, 2017. So you would have to go under the state law for, there's a law in every state, like I said. In Florida, it's Florida's Deceptive and Unfair Trade Practices Act, and you would just go to arbitration. Or you could, before that, you could say, look, this is a violation of my state, of the state unfair deceptive acts and practices. I want you to remove this loan from my credit and I'm not responsible for it. You could try just doing it without going to arbitration or without going to court and just send it to the lender. You could do a CFPB complaint at consumerfinance.gov. You could do a BBB complaint, Better Business Bureau complaint, if you want to go that route, to try to get them to just remove you as a cosigner on their own, with them recognizing the fact that they are breaking the law. If you don't get any movement there, then you just simply move on to, if there's an arbitration clause in the agreement, you file for arbitration. Okay, and for our client, we filed for them and we basically said, hey, look, they got no compensation for this, and we got a settlement out of it. So here's a photo of the settlement agreement and release. You can see confidential settlement agreement and release, whereas so-and-so, also known as so-and-so and so-and-so, entered into a Florida motor vehicle lease at Gunther Volvo in Coconut Creek. The vehicle was damaged. Geico paid them $10,000. So-and-so absconded with the $10,000 and the vehicle was returned in an unrepaired, damaged condition. The vehicle was inspected by Volkswagen's behalf and the damage was so-and-so. The vehicle was secured as a voluntary repossession. A repossession notice was mailed and indicating a deficiency balance. So-and-so disputed and objected to the consumer reporting agencies. Now in yellow, here's where it gets good. Now, therefore, in consideration of mutual covenants herein, and for the good and valuable consideration, the receipt and sufficiency of which is hereby acknowledged, Volkswagen and so agree as follows. Volkswagen agrees and represents to delete so-and-so trade line associated with the lease and release so-and-so from any obligations under the lease. Okay, so that's pretty important. Okay, because that's pretty much um, what we're after, right? Is getting the item deleted from the credit report and also making it to where you are not liable for it. Okay, so this was a great example of how to use this. Now you want to be careful, okay, because you want to make sure that if you're doing this, you're going to be doing it for somebody that it's a good idea to do it for. So when is it a good idea to try and remove a cosigner from a loan? If the loan is reporting derogatory information on a cosigner's credit report, that is usually a good time to remove someone as a cosigner. Okay. If it's not reporting derogatory information and the person is building credit, you may just want to leave it alone, right? Because it could be positively affecting the cosigner's credit report as long as the person is paying. But if they do stop paying and you're getting late payments or it turns into a charge off or a repossession, then you definitely want to go after removing it. But be careful. You have to make sure, because if you file an arbitration or in court, they can turn around and also sue you and possibly get a judgment. Okay, if they can prove that somebody the cosigner received compensation, goods, services, or money. If they cannot prove that the person really didn't receive it, then it's how would they be able to prove that the person did receive it? So likely you would win on that case, just like we did, and get the results that we did. They always will usually settle right up before the hearing. Okay, they'll act like they're going all the way, and you just need to act like you're going all the way, and then they'll usually settle right before. Also, number two, if the cosigner's debt to income ratio is too high to be approved for credit. Okay, so this is another situation that let's say that you're trying to buy a house, or let's say that you're trying to get approved for something and your debt to income ratio is too high. Okay, so people confuse this all the time. What is debt to income ratio and what is utilization? Debt to income ratio is all of your monthly bills. If you look at a credit report, it's going to be all of your installment account payments, right? Like a car payment, a mortgage payment, a loan, any installment account where you pay a certain amount every month. They're going to add all of those up, and they're going to add the minimum payments for all your credit cards. Okay. So that compared with your monthly income is going to have a percentage of your debt to income ratio. So if you make $10,000 a month and your total bills are $5,000 a month, you're at 50% debt to income ratio. So let's say that, for example, that loan that you co-signed for is making your debt to income ratio too high because it looks like you're paying too much each month, when in reality you're not paying that, and you want that off your credit so that it will lower your debt to income ratio. Utilization is the percentage of a balance that you're using compared to the limit on a credit card. So if you have a credit card with $1,000 limit and the balance is $500, your utilization would be at 50%. And there's individual utilization for each card, and then there's overall utilization where you add up all of the card's limits and balances. Okay, so those are two situations where it'd be a good idea to, if you're a cosigner, to get yourself removed. Okay, the FTC cosigner notice must be signed or it is a violation of the credit practices rule. And again, there's no private right of action for the FTC Act, which is federal law, but it is an automatic or per se violation of the state version of unfair and deceptive acts practices. Okay. Yeah, so you must have received the notice to cosigner. Notice to co. signer. Okay, and then again, that's that separate sheet of paper. If you did not sign that, then you can go after removing yourself as a co-signer. Okay, just like we did. And again, we ended up settling our situation, and it worked out great. So you'll see there in yellow how we were able to get that removed. Okay, delete the trade line associated with the lease and from any obligations under the lease. So if you guys have any questions regarding this or anything related to your credit, if you would like us to give you a free consultation for your credit reports and possibly use us to go after repairing your credit, you can just go to our website, swgroupcreditrepair.com, and just click the red button, fill in your information, and we will contact you to review your credit report. We'll share our screen with you and go down each item one by one. Okay, we're one of the few credit repair companies out there that actually really know what they're doing. Okay, so that's it for this video, guys. And again, any questions or comments, just let us know. Okay, thanks for watching.